Perfect. Well, Tim, the floor is yours, brother.
All right. Well, good morning, everyone. My name is Tim O'Rourke. I'm one of the co-founders of Cap Asset Risk Management, and then my business partner, Herb Dorow. We say the H in his name. He's also one of the co-founders of Cap Asset Risk Management. So we're here today to talk a little bit. We kind of call this demystifying apartment insurance. I assume most of us are multifamily investors. Is that correct, Winston?
Yes, it looks like a majority of people have familiar faces. And guys, remember too, if you have questions, filter them in the chat. We'll definitely address them right away. If you guys have ADD like I do, I can't make it to the end and remember, so filter those in.
Yes, yes. Please feel free to do that. Even speak up if you want to and ask questions when we're in the middle of anything. We can diverge and come back, and obviously, hopefully, there's a bunch of questions that we can get answered for you guys because this is a bit of a challenge right now. It's everyone is having issues with insurance, and if we can try to simplify that a little bit, or at least get you a little better understanding, maybe some of the terminology, please feel free to ask why we're doing this. So again, this is Demystifying Apartment Insurance brought to you by Cap Asset Risk Management, and we're at the Equity Exchange meetup. A little bit about us. I am Tim O'Rourke. I am the bald one. Herb is the one with the nice hair, as we say. So we are active members in multifamily mindset. I don't know if some of you are in that group or at least have heard of it. We joined about a year and a half ago. We've been insurance agents for a long time. And decided we wanted to get into the multifamily investing world. As of right now, we're GP on 129 units up here in Michigan. It's a class probably C that we're improving right now. Value add from exterior and interior. We've got about a $2 million capex to kind of go in and fix both, again, the exterior, the interiors, raise rents, get a little higher NOI. That's our plan, like everyone else. Together, we've got about 20 years combined insurance experience, and we've been interviewed for several magazines. We were on Zach Rucker's podcast. We've done Topic Tuesdays. So we enjoy speaking. We enjoy it. We like to lead with education. Again, because you guys aren't dealing with this every day. Herb and I deal with this on a day-to-day basis. So if we can help simplify anything, again, that's what we're here to do today.
Yeah, we got a chat right now, Tim.
Okay.
When you value add, does the insurance go up immediately? How does that work? So it depends on what the value add is. If you have a complex that doesn't have a clubhouse or a pool, and you add a clubhouse or a pool, well, yeah, because you've increased the value at the property, right? The value of buildings, not the market value. We don't really care about market value. We have to replace the building. So now you have a new building. We'd have to add that to the policy. If you are talking about taking carpet and putting LTV inside, taking old cabinets and putting new in, just because they're new doesn't mean they actually would cost more, right? A cabinet's a cabinet. Insurance is already accounting for a cabinet. And the same with a roof or siding. In fact, not immediately, but possibly at your next renewal, those upgrades will start with mechanical or structural things. So a new roof can actually lower your insurance. If you redo the interiors and now you charge more for rent and have effectively maybe turned your tenant base, a better tenant base can actually lower your insurance when we're underwriting the risk associated with a property. So yeah, playground, if we add that, there may be a slight increase. Adding security cameras, certainly that can help reduce. So it's swapping out new kitchens in the old ones isn't going to increase your insurance. But long term, if we do some things to the actual buildings, we add security cameras, we roll our tenant base to a higher paying tenant base. So a class C property typically attracts class C tenants. Class B plus properties attract B plus tenants. That has an effect on insurance.
Yes. Thank you. So a little bit about our company. We started Cap Asset Risk Management to service people that we do business with. We found there was a real hole in the marketplace, especially when it comes to newer investors in the apartment space. Typically, you're buying your first 20, 30, 50, 100 units, and there's not a real good marketplace to go to there. A lot of people go to their Allstate insurance agent or their Farmers insurance agent because that's where their parents went to. Or they go to these huge, huge firms, and all of a sudden they're the smallest client. They're not getting service. So we found a real hole in that marketplace for if you own between 20 and say 2,000 doors, where you're not getting the service or you're not getting the expertise. We wanted to meld those two things together. So we've kind of created this insurance agency to help with that. Whether you're a fund manager, whether you're buying your first apartments, we really found a hole in that marketplace and we wanted to fill it. And it's been very good for us so far. We both came from large insurance firms. We insure, what do we have, probably 60,000 doors right now, Herb, that we insure across the country. Yeah, so this is something that we do all day, every day. This is what we concentrate on. So today I want to talk a little bit about finding a broker. This is a very important part, as Kim alluded to, when you're starting to build your team out there. You want to make sure you go out there and you find a good broker. As she said, you've got to know, like, and trust your person. And your insurance agent typically is going to be with you throughout the entire process. So first thing you want to do is you want to find somebody that you like, that you trust, that you go and have a beer with, you go have dinner with, because they're going to be an integral part of your business and your long-term plan. We don't want to do transactional 1 year. Like, your home and auto is so different. Your home and auto is an algorithm that figures it out. And if Allstate's too expensive this year, you go to Farmers and you continue to jump around in the residential world. Commercial is going to be different than that. So again, you want to make sure you find a broker that you like and trust. And you really want to find one that specializes in habitational business. You don't want to go out there and find a generalist just because they won't know all the intricacies and the ins and outs of it. So Herb and I joke, we don't insure contractors. We don't insure flower shops. All we insure is habitational business. So our main business is apartments. That's cap asset risk management. And then we insure condo and homeowners associations as well. So all we're doing all day is looking at habitational business. A little bit, we are independent brokers. I don't know how familiar you guys are with that. So you've got captives, which is your Allstates, your Farmers. We are independent. So we can go out to several different carriers and try to get them to accept your risk and find the best policy and the best coverages for them. And one thing, you don't want to go out and get 5 different brokers. You want to get maybe 1, maybe 2, because a lot of us are going to be going to the same carriers. And you want us to battle on your behalf to these carriers. So Winston, you go out and buy a 100-unit property down in North Carolina. You don't want to get 10 different agents involved because a lot of them are going to go to the same carrier, and some have favorites and some have different commissions. So you want to pick 1 or 2 that are going to go out and really fight for you in their business. And we have to go through a lot when it's an underwriting. And our job as your broker is to tell your story to these insurance carriers. Hey, if you're buying a Class C and the roofs are a mess and the parking lots are a mess, but you have your business plan. Hey, the next 6 months, we're redoing the parking lots. Month 8, we're starting to do the roofs. We want to be able to tell that story to the carriers to make you guys more appealing to them as your risk. So your business plans, and again, it's going to be a lot more in-depth conversation probably than you're used to when you're talking about insurance. But we need to get all the details. It's kind of a pain in the butt, but you're going to want somebody with some expertise to be able to kind of smooth that road a little bit for you guys as we go. And independent brokers who specialize in habitational business are going to be your best bet for that. Any questions on finding a broker? Any broker questions?
We got a question on here. It says, what are the best resources online to look for brokers?
Yeah, there aren't really any. You can have a guy who's never written an apartment in his entire life have the best website in the world, and you think he's an expert. It's about having conversations with a broker, and in that conversation, having that broker talk intelligently to you. And what I mean by that is not brokers saying, yeah, we can do that, or this is your guess rate, right? We oftentimes see brokers provide sample quotes to clients, maybe just before an LOI or just after an LOI. And those quotes are unrealistic in the context of how they value buildings. Sometimes they're unrealistic in everyone wants to talk about a per unit number. And I understand that might simplify underwriting to think of insurance that way. We have a deep dive on that, but we don't care about a per unit number. A 3-bedroom unit costs a lot more to rebuild than a 1-bedroom unit. There's more square footage. So there's more electrical wiring, there's more carpeting, there's more cabinets, there's more toilets, all that stuff, right? And so we try to educate our clients think the biggest thing you'll get, Jessica, is if your agent is trying to educate you, they probably know what they're doing. If your broker is simply sending you an application to fill out and saying, return this and I'll shop it, they probably have no idea what they're doing.
Agree. Are good? Ready to move on? Right. This is what we call our pre-LOI, post-LOI inspection list for apartments. So these are some of the things that you're going to want to look at when you're going into potentially submit an LOI for an apartment. Obviously, some of this information we're not going to be able to know until we get into it, but a few things to look out for. Electrical panels have become an absolute hot point in insurance over the past couple of years. There's a few, we'll call them red flags. If apartments have aluminum wiring or a few of these specific panels, Federal Pacific, Stablock, Zinsco, there's a few more on there. And that really is an issue when apartments were built in the 60s, and into the late 70s. That's what we're running into issues with. There's some of these, we call them a no-go on some of these different panels that have made it very, very difficult to acquire insurance for apartments. And a lot of this, it's going to be hard to know until you get into your due diligence, potentially. But I'm starting to see on some offering memorandums, they're actually putting what the electrical panels are, what the wiring is. So some of these brokers are starting to get a little more familiar with how potentially the insurance will work. But again, a lot of it is going to come down to the electrical. Aluminum wiring, if it's not remediated, you're going to have to go into what we call the E&S market, and insurance is going to be significantly more expensive. Sometimes
more brittle aluminum wiring.
Yep, more brittle, can potentially cause fires. Mm-hmm. So the aluminum wiring and then the panels. Are you guys familiar at all with the Zisco and Federal Stablock? I'm sure if you're in this world, you've started to hear those names get thrown around more and more. We've got some carriers that will insure them if you have a plan in the next couple of months to remediate the electrical problems. But again, that is something everyone needs to start looking out for more and more when we're going to look at these 1960s, 1970s vintage apartments, which in my world, that's a lot what we're looking at. We're going towards the value add. And so we're starting to see more and more of those. So we've got connections now to electrical contractors that can start giving quotes to replace these, because eventually they're going to have to be replaced. Not too far down the road, it's going to be almost impossible to find carriers that will insure if they have this type of electrical wiring in these buildings. Plumbing is starting to become an issue as well, depending on what kind of pipe you have there. If you look in our pre-LOI inspection list at AFA, if they have copper or PEX, that's a good thing. When you go to galvanized or cast iron, we highlight those in red because those will become a little bit more of a challenge to get insurance for. And then everyone's favorite, roofing. A lot of these apartments have the original roofs, or they were replaced 30 or 40 years ago. That is, again, becoming a bigger and bigger issue with insurance carriers. So if roofs are older than 25 years, we've got to have a plan to start replacing those roofs. Hopefully that makes sense. And that's just, again, something that's becoming more and more important. But as you go through this pre-LOI, post-LOI inspection list, it asks a lot of the questions that will be needed for an insurance quote. Again, when roofing was updated, electrical, plumbing, fuses. So this is a good thing to have in your guys' back pocket when you're looking at a property, but especially when you get that LOI accepted, these are some questions that you need to get answered right away.
Got a question from Tiffany. She said, what's the typical cost of the remediation for, let's say something has aluminum wiring and you want to do a full gut and change. What's that look like typically?
Yeah, so typically on aluminum wiring, unless you're actually going to gut the unit already, we're not going to gut the unit. What we're going to do is we're going to pop out the panel, and at all the connections in the panel, we're going to add a crimp. And it's a copolymer, Alumcom. There's a couple of them. And what's going to happen is they're going to crimp that. So here's the thing with aluminum. Aluminum expands and contracts due to the heat of electricity faster than copper. So when you put an aluminum wire into a copper fixture, it expands a lot faster and contracts faster. So that causes that break issue. They put a metal that's a blend of aluminum and copper onto the aluminum wiring and then into the new copper outlet or light fixture to help soften that variance between the two. And what we see, depending on, if it's 3 bedroom, it'll cost more, but typically what we're seeing is 2,500 to 3,500 a unit. And that typically is about the same if you have to replace a panel. Now, panels can become more expensive because the new building code in almost every city requires 3 feet of variance access to a panel. So if your panel is in the same closet that your washer and dryer double stacked are in and your hot water heater's in, and you don't have 3 feet, just because they can replace the panel doesn't mean they can put it right back where it was. And that creates a larger cost issue. But so what we're seeing typically is to add the crimps, it's about 2,500 to 3,500, and then it's about 2,500 to 3,500 for a panel.
And to go off of that, because I've run into in North Carolina, I've seen some properties in late 80s have a lot of the Lumicon. Would you prefer, it's two-part, would you prefer a Lumicon over pigtailing or vice versa? And also,
Yeah.
when you do that, is that a Band-Aid solution, or how long would you give that in your opinion?
My guess will be that the standard carriers are gonna be okay with Cloplarm, the Alumicom, pigtails. Most standards are getting away from because it's just a wire nut and they don't really love that. So I think they're going to be good for the next 25-ish years, but I can't guarantee that. At some point, the standard carriers are just going to move away from aluminum completely. And we've seen a lot of the specialized programs like Middle Oak, SEBA, Hab Pro, for instance. They won't even touch anything pre-1985 because they're just not going to mess with aluminum. So as we get the specialized programs moving away, then I think we'll see the state farms and the farmers, which can have incredible policy language and great rates in certain areas. They'll start moving away. But I still think that's a good 20 years down the road, as long as it's remediated properly.
Awesome.
Let's talk a little bit about underwriting. Obviously, I assume a lot of you guys are underwriting different properties when you go out and find some. A few tips and tricks that we do. First of all, when you're looking at a T12, typically everyone just goes to that final number on there and uses that for your insurance number. We kind of say, hey, look at the 12 months. So January, February, March, maybe they were paying $2,000 a month for insurance. And then come April, all of a sudden they're paying $4,500. That's typically where we've seen a renewal, and the renewal went up. So we say, hey, extrapolate that that higher number into the 12 months, and that's where you should come up with their current insurance that they're paying, which typically is going to be more expensive. Insurance, we don't think insurance is going to go down anytime soon. We don't think we're going to see these crazy increases that we have seen in the past couple of years. I don't know how many of you guys own property already. Have you seen some large increases in your insurance? If you have, that was kind of a twofold thing. Back a while ago, and it's probably insurance agent's fault and it's carrier's fault. We used to insure an apartment building for, say, $80 a square foot. We all know you cannot rebuild an apartment for $80 a square foot. But for many, many years, that was just kind of the gold standard. We were able to do that. Everyone was happy. We could have guaranteed replacement costs or blanket coverage, and buildings were able to be rebuilt because of those different coverages. Carriers have gone away from that now. I mean, we're in that $140 to $170 a square foot to rebuild apartments. And that's why you saw a significant raise in the insurance costs. So it was twofold. You had the building values going up significantly, and then you did have some premium increases. So it was kind of twofold there for a while, and everyone's insurance was going up 30, 40, 50, 60, sometimes 100%. And that was the two main reasons for that. We think that has leveled off now. Most building values are probably insured for the correct number now. So we shouldn't see these huge increases anymore, which is good. But on the other hand, capacity is getting much, much tighter, especially in coastal areas. If you guys are in Texas or Florida or Alabama, anywhere near the coast, insurance has become a real nightmare. It's just because there's not as much capacity down there anymore. We're continuing to have more and more large storms. So it's becoming more and more expensive. Now, sometimes that still works in the deal, though, because people are paying higher rents if you're closer to the water. So it doesn't necessarily kill your deal, but you've got to have a realistic number for insurance when you're going in there. When you're underwriting a deal, again, use that higher number to extrapolate to the 12 months. But on your quick and dirty underwriting, add 10 to 15% to what they're currently paying. If all of a sudden this deal pencils out and you love it and you're going on a deep underwriting, that's when you can start to engage a broker and we can go out and get what's called a soft quote. So that's a quote that we'll go out and talk to the market. We make assumptions that there were no prior losses on this, and we can come back with a somewhat accurate number of what we think insurance will be for the current property that you guys are looking at. And then once you submit your LOI, I mean, one of the first things you need to do is, again, engage your insurance agent. Get that off of your plate. You guys have so much to do in due diligence. There's so many different things you need to work at. And all of a sudden, insurance becomes 11th hour. You just go out and get it. We want to be involved very quickly to get that off your plate and get you guys a real number. So once you do that, we'll ask for the old owner's current policy, and then we'll ask for what's called loss runs, 3 years to 5 years history of what's called loss runs. And that's essentially the history of the property that you guys are looking at. Was there a fire? Was there a flood? Was there a slip and fall? Because unfortunately, in the insurance world, you do have to pay for the sins of the previous owner because they will go into your insurance policy. So we try to get involved again on the front end to try to take that off your plate so you guys can look at some of the other things that you have to do on this property. Any other questions? What are you guys thinking? I know I've thrown a lot at you here, and please feel free to pepper us with questions.
I'll throw something in as I know when you were saying like add 10 to 15% of what they're currently paying. What I've been doing for underwriting, whether it's wrong or right, is typically I've talked to insurance brokers and get a very, very, very rough estimate, right? In the Carolinas, for instance, South Carolina, I'll do 750, North Carolina, I'll do 850 a door, and I'll work off of that because I've noticed with a lot of these properties, especially when you get the 80 to 150 range, a lot of these guys already have a portfolio, right? So their insurance isn't necessarily property specific. It's more based on their portfolio, which can, mess you up sometimes if you're going off their numbers. But how would you usually gauge that, or what's your thoughts on having some type of rough estimate? Just because I used to do that, like you said, 10 to 15% plus, but then you get guys who are paying 250 a door. It's like you're not getting that when you're buying this property.
Yeah, so you're right. Large package, policies of that nature that have risks all over the United States can skew numbers a lot. I think the easiest way, it's a math equation, and the easiest way is to engage the broker and say, hey, listen, we're pretty serious about this deal, but we need to narrow down exactly what our insurance costs are going to be. So if you could at least send over the insurance certificate for the property. And the reason we want the property certificate is because it's going to list the total value that the property is insured for. And so if we take that total value and we divide it by 100, insurance rates, so we'll back up. Insurance rates are based on every $100 of coverage that you purchase. And it's in the pennies, right? So it's 20 cents, 30 cents, 50 cents for every $100 of coverage. So if we take the amount of coverage they have and we remove the last two numbers, that's the same as dividing by 100. That's the number of units purchased in $100 increments of coverage we have. If we take our insurance cost and we divide it by that number, we will get the cost per 100. If that cost per 100 is 20 cents, it's very low, right? So you call us and you go, hey, what's the market rate going to be over in Missouri? Well, Missouri has a lot of wind issues. So we're going to look at like 50 cents. If you're looking at a property in Missouri that's only paying 20 cents, you know you're not going to get a 20-cent rate. And we'll go, hey, what we're seeing is 50 cents. So they're insured for 20 million right now, and you're going to purchase it for 25 million. So instantly you have to insure it for at least 25 million because no bank's going to insure it for less than they have out there, right? They want their property rebuilt and secured. So then we'll take that 25 million and we'll divide that and multiply that by 50 cents per hundred, and we'll come up with a realistic, closer number for you. But I think the problem we run into is people want an accurate number from the very first day, and that becomes a challenge. So I would say when all the numbers work, even adding 10%, it works. Then call us. And then we'll go, well, that number's not realistic. This is what we're seeing. That doesn't mean that's going to be your number, but it gets you closer. If that still works, then let's submit an LOI with some language that says the LOI is dependent on us being able to secure insurance at or above our lender requirements for the price we underwrote and get an LOI accepted. And then we can get into it. The problem in the analogy I like to use is if you want a hard price, so you're shopping for a new Ford F-150, I go to 5 dealerships. I beat the snot out of them on price, and then I don't buy a car at all that year. And then I do it again next year, and I don't buy a car, and I do it again the next year. Do you think any of them are ever going to give me their best price by year 3? So we can't necessarily engage carriers for every single property that looks pretty to you. We have to get at least to, hey, I'm pretty confident I'm submitting an LOI unless something goes wrong here. And then we can start to have real conversations.
I got a question for you guys. Can you guys hear me?
Yes.
So there's this one insurance brokerage, and I don't want to say the name because, this is your platform. I don't want to take away whatever's going on here. But on their website, right, it lists a certain geography of the United States, okay? And it basically says, okay, let's say, for example, Illinois, right? Illinois, Michigan, let's say Wisconsin, those, the blue wall state, right? They'll average about $800. So on their website, if I go into it, and then let's say I click Michigan or any other state, they have a certain average of what they've been seeing in the last 6 months. Would you guys have something like that? So that way I'm not saying that we don't want to bother you, but at least just for a skinny underwriting of sort, we could say, oh, in Texas, we're seeing 1,100, right? Or in Oklahoma, we're seeing, I don't know, 1,200. I'm just shooting off numbers here. So that way, when we do a dirty underwriting, okay, we'll just plug into that, put it in. And then if we get accepted on the LOI, then we'll call you guys and say, hey, we got accepted on our LOI and we took your average for this state. What can you really give us? Does that make sense?
Yeah. Yep. And I've seen a few of those out there. And again, I love them for probably the quick and dirty underwriting. But you can have a building right next to each other. One can be $500 a door. One could be $1,200 a door because of all of these factors that we've talked about earlier. Could be electrical, could be the year built, could be roofing. So yeah, for quick and dirty underwriting, that website, yeah, I know there's a few of them out there. I've seen them at several different places. So you can use that as your probably quick and dirty underwriting. But for actual numbers, those could be so far off that it could potentially change a deal significantly. So if you have an OM, those numbers should be relatively close. If you don't have any idea, then yeah, you can probably use one of those. But it's so unique. Every building is so unique. It's very hard to have a generalized number. Again, yeah, more expensive on the coast than it is in Michigan. So we can give you some of those generalities. But the per door, again, everyone loves those, but they're very, very inaccurate, I guess would be my answer.
Okay. I understand because you're taking an average of what was underwritten or
Yep.
policy in a sense, right? for that state in the last, I don't know, 12 months, right? So if you're
Yep.
taking the average, of course, I'm not going to go by that because I don't know what the highest and I don't know what the lowest is. You know what I mean? So in
Correct. Yep.
essence, you're right. It's never going to be the most accurate statement, but however, comma, for just a quick and dirty underwriting, it'll suffice. But
Yes.
I understand that you're saying, to call you guys to get an accurate quote, and that's fine. But now let me ask the next question then. Do you guys have like a website where we can just turn it in, or do we email you guys directly?
Yeah, so we can actually send out this form that you're looking at right here, this pre-LOI, post-LOI, and then that gives us a lot of information. And then typically we'll send you this and then ask for the OM and the T12s, because we're able to pull a lot of information off of those documents as well to go and start to work up a quote or a soft quote for you guys.
Gotcha. Okay, thank you.
Yep. I think, Eric, were you raising your hand?
Yeah, no, to add to my understanding is I'm in the state of Florida. So normally when I underwrite, I do it between 800 to 1400. That's what more or less I started off, but I still go get a quote, and the quote on a couple of properties are coming anywhere between 1100, 1200, because I do send the OM as well as the T12s and, rent roll to kind of make that determination. But for a quick and dirty analysis, normally it's anywhere between 800 to 1400. I always underwrite it to 1400 just be safe.
Yeah.
But then get when I do get the quote from the insurance agency that I've dealt with, they basically have come back anywhere, like I said, like 1050, 1100. So, especially if it's closer to the coast. So, for
Yes.
example, if it's Jacksonville or anywhere in the Southwest, like Tampa, where we just had a massive hurricane. So, I'm sure insurance rates are going to be restructured after this situation occurred, So, but yeah, and understanding that. So, we would also email you, you would email us that back, and you would just basically fill it out. But would we have to find these questions first from the broker that we're trying to, hey, we need this information before submitting an LOI?
Some of this
Like
information.
a general email or something. I'm not saying to, of course, release the form, but
Yeah.
normally what I tend to do, I like to email, and structure my own verbiage in it. Like, hey, I need this information in order for me to accurately submit an LOI. So that way, at least we know that I can,
Yeah, in a
that's all.
perfect world, if you could find all these answers from the broker prior to submitting an LOI, that would be awesome. In our experience, some brokers are great and will share this information. Others will say submit an LOI and then we'll get you this information. So we want to put verbiage in LOIs specifically about being able to obtain insurance at a reasonable cost, because it gives you an out potentially in your LOI if you're, again, in one of your properties, you underwrote for 1400 and it comes back 2600. You don't want to be locked into that, because that will kill your NOI if you're $1,000 more a door. So yeah, if you can get as much, and again, I've seen some OMs that answer all of these questions. There was just one the other day. I was pleasantly surprised. It said, "Oh, we've got square D panels. We've remediated the aluminum, and we upgraded the plumbing in 2019." Some are starting to give you all that information now, so you're more weaponized when you're going in and potentially offering this LOI. If you find the perfect off-market deal from a mom and pop who've had it for 30 years, you're probably not going to get this information until you've submitted your LOI and you do your own due diligence.
Yeah. And a lot of the questions would be also on what type of CapEx has been completed most recently.
Correct.
Because a lot of the CapEx, you're able to see, oh, okay, plumbing updates, electrical updates. Okay, so we know that based upon the age, that's why sometimes it may be an older property, like in the late 70s or something, but renovations in 2003. Okay, what kind of renovations? CapEx, electrical, plumbing, okay, roofs completed. So you know the life expectancy of those items, more or less,
Yes. And carriers are getting more and more sophisticated with the introduction of AI, where some of our carriers now are able to go we submit an address, and then they can go see what permits were pulled. Was a roof done in 2020? Was plumbing done in 2018? So they're becoming more and more sophisticated on that. A little tip I've learned too, if you download Google Earth Pro, you can actually change the date from when the satellite picture was. So you can say, okay, hey, there were dumpsters out there in 2018. They must have been doing some major renovations. Or the roof looked like crap in 2020. Now all of a sudden in 2024, the roofs look beautiful. So you're able to get a little sneaky information that way, if the broker or the mom and pop are not divulging information to you that you need.
Mm-hmm. Perfect. Thank you.
Absolutely. See if we have any other questions.
Are you still, do you still have more slides?
No, nope. Just
Okay.
kind of
I was about to say, I don't want to keep going off the tangent if you got more slides.
no.
Do you mind, and selfishly again, because I'm in the Carolinas, could you speak a little bit on, it's two parts, is any things that you see besides what you listed that could be insurance risks, like flat roofs, for instance? I know I've, heard a lot about considering not looking at flat roofs just because of, sitting water, leakages, things like that. But then also to flood maps, because I know I've talked to some brokers about flood maps specifically in the Carolinas as far as the 100-year, the 50-year, being able to protest them. Could you speak a little bit to how severe it might be or how severe it might not be? I know some people just say, if it's in a flood map, I don't want it. Others will say, well, it only affects the first floor. It's not the whole, every specific unit. So could you speak a little bit on that? Because I know some people are looking in the Sun Belt, whether it be coastal.
Yeah. So, I mean, first off, questions give us answers, right? So if I notice a property is in a flood zone, I'm going to reach out to the broker and I'm going to ask if they currently have flood insurance. Is that flood insurance reflected on the T12? It doesn't mean it's a bad deal. The next I'm going to do is I'm going to call my loan broker that I have a relationship with, and I'm going to say, hey, I'm looking at this property. It appears that these two buildings on the back corner are in a flood. Are you going to require me to have flood insurance on these? Are you going to require me to have flood insurance on the whole property? So it's going into that. But again, it's the premise that just because it's in a flood zone doesn't mean it kills the deal. Specifically, if let's say they're already paying for flood insurance and that's reflected in the T12 and my flood insurance is going to be roughly the same, then why wouldn't I buy that property just because it's there? The other question to a broker is, do I need to have flood insurance? If we do a replacement cost evaluation on the two buildings in the flood zone, and each of those buildings would cost $4 million to replace, but again, they're 3 stories and the first floor is about 2 feet above ground level. You have 2 steps coming up into it. There's no crawl space or basement. Do I have to buy $4 million worth of flood insurance? Or may I simply buy 1.5 million? And your mortgage broker is going to give you that answer. And those are all things that we're going to want to look at as we go into the deal, but it doesn't necessarily kill the deal. We just did 36 duplexes in Arkansas, and the current owner had flood on all of them. They put an LOI in, they knew they were going to buy them. They knew the flood price. They put the LOI in, they get accepted. We emailed their mortgage guy with them copying on it and said, hey, which of these addresses are you going to require flood on? He came back and only needed flood on 30 of the 36 buildings. So that's what we put flood on.
Yeah, and flat roofs, we're not scared of flat roofs. They just need to be maintained similar to asphalt or steep slope roofs. There's probably a little more maintenance, but they tend to last a long time once they are upgraded. And there's several different options now with flat roofs to make them last longer. There's new technology coming out all the time. So I would say we're not afraid of flat roofs.
Yeah. And so we'll talk about roofs too, like Tim said, flat roofs, right? Those mansard style roofs where kind of the roof comes over and it's like the second story of the building actually shingled and the roof's on a very steep pitch.
Yeah.
Well, sometimes in Kansas and Missouri, they don't love those because there's a lot of wind. That's a convective area, right? West Texas. But they have insurance currently. So there's no reason to believe that we can't also get insurance, as long as when we underwrite the deal, we have an understanding of, are they purchasing the proper amount of insurance, and are they paying a rate of insurance that's reasonable to the market? And then will that transfer to me? And if I can get those same terms and this deal works, I say buy the place.
No, I appreciate that. And that's my fault. I'm thinking just natural risk management, because I know a flat roof
Yeah.
sometimes, I think condensers might be on the roofs, and the accessibility to changing those, is something to keep in mind. But no, I just wanted to hear you guys' opinion, because when the guy told me it only applies really the first level of your apartment building, it's not the whole asset. I was like, man, I wonder what else, someone doesn't know that we might be disqualifying deals fairly early.
Yeah. Yeah, absolutely. I think communication is the key, right? Communication with the listing broker, communication with your lender or the guy who's going to source your funds. Those communications, they have a lot of insight specifically into flood and what kind of risk is going to be required. Also, what we're starting to see in coastal areas is wind is, I'm not going to say this is a guarantee, but what would happen in the past is if I had a $30 million building and we had it insured for 30 million, we had to have 30 million of wind coverage. Sorry, on a meeting. And then we had to have 30 million in wind coverage. So we would go buy that wind coverage for 30 million, but it's hard. There's not enough capacity. So we're seeing lenders allow us to buy what we call roof line coverage, maybe only 10 million. But if you're going to underwrite the deal and exclude it and say, hey, I can't buy this property in Panama City because I can't afford the wind insurance, without actually talking to your lender broker to find out you don't actually have to buy 30 million, you just kicked a deal out that you should have been buying.
And this is where you want to engage, again, experts who deal in this type of business. Because if you're not doing this every day, you wouldn't be able to get those options from other people. So engaging a habitational specialist is very vital in creating good programs for you guys long term. Again, we don't want a client, we want partners, and to help you grow from your first 50 units to, we want you to be those behemoths with 2,000 units, that we can get those good programs that Winston was alluding to for $200 a door. But that you've got to have some significant doors behind you, and we can build programs as you continue to grow your portfolio.
And real quick, we got 1 minute left. Just in case somebody wants to reach out, I know I've got tons of questions, especially being on the underwriting side. Can you guys put your information in the chat, and post it to everyone, just so everyone can save this after we're done, because I'm sure there's other questions as well.
Absolutely.
Any last questions? We got 30 seconds left, or comments, anything like that? All right. Well, I will say we appreciate you. Thank you for giving us some insight here. I know insurance, there's two main things right now that are things that we really can't change. They are what they are. It's insurance and taxes. So thank you for talking on the half of what's the most important with our underwriting, and we appreciate your time.
Absolutely. Thank you guys. We appreciate your time. And yeah, please feel free to reach out. We'd love to